Hello, I'm Ant Joblin and welcome to IP Go, the show where we take a look at the IPO world, past, present and future. Today we're having a look at one of America's most iconic brands. This company is so famous and so synonymous with America that we were surprised that it wasn't listed. That company is Levi Strauss, the world's largest maker of blue denim jeans. The firm can trace its roots back to 19th century Bavaria, where its founder was born before moving to San Francisco in the 1850s at the peak of the gold rush. When Levi Strauss himself died, the firm stayed in family hands, and after World War II started to pivot from wholesale to manufacturing its own brand of clothing. By the 1960s, Levi's, once worn chiefly by American cowboys, had become popular worldwide. When the company went public in 1971, it was operating in 50 countries. In 1985, the Haas family, along with other descendants of Levi Strauss, staged a leverage buyout that returned the company to private ownership. During the 1980s, because of increasing competition and financial difficulties, Levi Strauss closed nearly 60 of its US manufacturing plants and began shifting production overseas. The last two US manufacturing plants were closed in 2004. However, in the following decade, some production of Levi Strauss items returned to the United States. Sales continued to stagnate until in 2011, when the firm hired Chip Bergh as CEO, who remains in place today. He has been credited with turning around the strategy of the company, and in March 2019, Levi Strauss went public again, raising $620 million in its IPO. So, with the stock back on the market, let's have a look at the numbers to see whether it's worth pocketing some shares for your portfolio. First off, the firm has a market cap of $7 billion, with annual sales of $5.5 billion and net income of $283 million. Return on assets is 9.58%, better than the industry average of 8.44%, and return on equity of 27%, amongst the best of the industry. Levi does better than the industry average return on equity of 18.87%, and its price-earning ratio of 13.05 is a bit cheaper than the industry average of 16.94 and indicates it's correctly valued. The stock price is down 12% since its IPO in Q1 2019, but looks to have found some strong support around the $16 level. The short-term trend is bullish, with spot trading above the short-term daily moving average, and momentum trending is overbought territory. Resistance at the $20 level will be important to break and has come into play on 3 occasions already this year. Currently, the stock is trading at the very top end of a 6-month range between $20 and $16. Looking at Wall Street analyst forecasts, 94% were advocating buy recommendations. Now, this show usually covers new firms at the start of their journeys, but today goes to show that a business can come full cycle and be a success. As always, make sure you complete your own due diligence before making any investment decisions. See you next time.